Apple's biggest event is actually kicking off today. So, and the stock market just printed an all-time high last week, along with other stocks, in the index. So naturally, it is down ever since. So welcome to the stock market, where good news and the price chart doesn't always communicate with each other. So let's talk about Apple. So currently, as of right now, it's trading about $302 as of June 8th. It's currently 4.5 trillion market cap, and it's currently trading 38x to price to earning ratio. For uh, for a company growing in sales in low digits, this is a quite a spicy number. So hold that thought real quick. This video is for entertainment and educational purposes only. I'm not a licensed financial advisor, and nothing in this video is financial advice. These are my personal numbers shared just for transparency. Your situation is different from mine. Please make your own decision carefully. So, executive summary. So, here's why people pay for services for their bouquets. So, their services they have like app store. They actually take like 30% from developers who actually make those when you make a purchase to Apple. Just FYI. Their cloud service, iCloud, Apple TV. I feel like it's not that much. Apple TV. Auto subscription, they did about 108 billion last year. It's growing low double digits, but they have a 75% margin just based on SaaS itself. So, iPhone is just like a one-time hardware that you buy for X amount of years, but I think most people buy like every year for some reason of iPhones, of Apple users. So, regardless, whenever they upgrade their phone, it's the SaaS that's actually bringing up the recurring revenue as a subscription, basically, that feeds about 2 billion active devices. That's actually feeding it of the SaaS revenue. So that's really something that people can't really copy. And Apple deletes its own shares like it's a clear cash. So last year they actually confirmed that they're gonna spend about $90 billion in buybacks and another 100 billion that's approved. So basically supply and demand. So fewer shares, same profit. So the EPS, earning per share, goes up by itself. It's financial engineering, but it works. Then today, WWDC, they're expected to finally ship a rebuilt, actually useful Siri, pretty much just like Gemini. So Bank of America thinks a good Siri could be a 30 billion revenue by 2030. If the AI upgrade cycle is real, that's really the spark. All right, so for the bear case, which is kind of interesting. So the China risk, uh, 90% of the iPhones are built there. Apple is eating about 3.3 billion in cost, and it's passed on to consumers with the cost, or not having a really high spec phone. And a 1.2K phone, as of right now, could hit 2.1, but I really doubt it. It's not gonna really happen. But it just like last year with the trade talks with the tariffs, so it's not gonna happen at all, given the geopolitics that is really happening. So I really, really doubt it. Second is the price. The company is trading 38x price to earning ratio for a company that grew sales only 2% recently. It's really a steep price for really a slow growth company as of lately. A third, I didn't really mention it, but I don't doubt it, really doubt it at all. But it's really antitrust. So DOJ can really blow like 18 billion contract between Apple and Google. So actually, Google pays Apple to let use their default search engine as Google. They pay for that every year. But I didn't mention that in the slides because it's always been talked about and it's never gonna happen. So this is actually their business model for 2025. So iPhone, they made about 220 billion, so roughly 53% of their revenue. They're trying to make more in India plus Vietnam, but they're not exactly that great. So they're still also relying on China because they have X amount of experience and financially just still make more sense to do in China because they have well, mostly the capacity and the skill set that is not easy to replicate in India or Vietnam or anywhere else in the world unless they've been doing it for X amount of years. So going back to services, so as said before, 108 billion is 26% of their total revenue. So that's a huge percentage. Given is a 75% margin. Mac and iPad, they're doing pretty good. 57 billion, 14% in total. So the M series actually really benefiting them. Prior, not really so much, but the M series really benefit them. I know a lot of people, even personally, that I know a lot of people switch from Windows to Mac because the M series that Windows haven't found a solution yet. Even with their new ARM laptops that they have, they still can't beat, the M series given the price of performance. All right, so this is the numbers. So as you can see, the revenue growing, 383 billion, 391 billion, 416 billion, and right now 101 billion. As you can see, the percentage are all here, earning per share went up by a lot, then, kind of stayed down a little bit. So they're doing well though. But again, this is a quarterly number. So obviously by year end it's gonna be different. So these are based on per year rather than quarterly for Q2. So how cash flow works. So as you can see, free cash flow went from 93 billion to 106 billion. Even with like flat sales, because more of the money now comes from high margin services, like as I said before, SaaS. 106 billion last year, 27.9% free cash flow margin. As I said before, 90 billion that's authorized now for buybacks. An additional 100 billion for additional stock buybacks. And as of right now, the quarterly dividend for Apple is 27 per share. All right, dividend buybacks. So DPS is $1.08 quarterly, 27 cents. Their dividend yield as of right now is 0.39%, and their payout ratio is about 14%, so it's quite conservative. And given their latest dividend raise is 4%. And they've been consistent ever since 2012. So these are the last few years of the stock buybacks purchases, and obviously the fifth one is the latest one, 90.7 billion. So shareholder returns, so 350 billion return to shareholders in the 3 years. Buyback shrink in the share count 3 to 4% a year. New 100 billion repurchase authorization approved, and dividend raise every year since 2012. Basically a 14-year streak as of right now. So how solid is, Apple? So given their cash, it's quite impressive for a company like this. They have a huge cash reserve for a company like Apple in the Mac 7. So they have 141 billion, not totally all cash, but it's also investment too. So that's actually a huge number for them. Their current debt is negative, I suppose, 101 billion. Their net cash position, that's an impressive one, 40 billion. Their shareholders' equity is 57 billion. Their return on equity is 170%, and just goodwill, they have 0.7 billion, and their capital spending is 9.5 billion. With their current credit rating, it's capital AA or triple capital A. So it is the highest possible. It's really debt issue nearly risk free compared to the U.S. bonds. So they're doing very well of their financial. So the bigger pictures, this are just mentioned before, the China risk, you know, especially the last one that I do want to mention. India and Vietnam, you know, the base is accelerating, they target 25% for US bound and iPhone from India by 2026. Again, I doubt it. I mean, it's not like it's not gonna happen, but it's more like the timing of it. I don't think it's a good time at all, unless they bring up the cost for some reason. And I also think that the quality will it's gonna be matchable compared to China, because you can't beat the amount of experience that they had and what they have in the assembling line and the machinery that they have and all the raw materials. It's all basically from there. Global trades, most of them goes to China. So, but I think it's mostly just the quality of it, and financially it doesn't really make sense. By end of 2026. But at least they're doing like more of the Mac Minis, in the States. So that's sort of helping. Off kind of helping. But it hasn't been going well as of right now because Mac Mini is kind of out of everywhere right now, given the open cloud demand. So it's kind of out right now. So the US dollar and international revenue. 50% of the revenue actually occurs outside of the US. So with a strong USD, really reduced, reported, international revenue. Greater China, remains 70% of the revenue, but that doesn't come without risk. So geopolitical risk, especially last week. I mean, not last week, last year. Huawei domestic competition can't really beat them. Their phone can't really beat them for price to performance comparison, and even for Samsung too, you can't beat them. I have a Samsung myself, so it's a bit biased, but they can't beat them in terms of price to performance ratio. But their services, their SaaS revenue, are largely just like US dollar or local currency mix, depending on where they are. They're hedging the program to reduce, but doesn't really limit the foreign exchange risk. Consumer macro and AI super cycle. So people keep iPhones for plus years now, over 4 years ideally. But again, I doubt it. I also heard like people like to upgrade their phones every year for some reason. So it's quite genuinely useful for AI to could pull that back to three, and the Spark upgrades, services subscriptions are recession resilient. App Store revenue less correlated with hardware spend. Again, they take a big cut. Developers they take like 30% of it when they pay to the App Store. And the new Siri, quote unquote, Gemini, is going to be launched. Should be launched today. As for the announcement later on, but it's not launching in the EU yet. So with their EU regulation, it's due for DMA rules. So what could really go wrong? So there's a lot of things that can go wrong. So as I said before, the App Store DOJ trust is quite high. EU is not the best place to do business, but it is still a big market. So DOJ/EU is forcing third-party app stores margin could compress 5 to 15%. Google AI dependency. Uh, Google pays $18 billion per year to be the default search engine for Apple. And not only that, Siri is not going to lean on to Gemini. So it's pretty much going to be powered by Gemini, but I really doubt it. They will say that when they open up Siri or something. I don't think they will say like powered by Gemini, but it is. So An Android leap. So Samsung's AI plus Pixel's been doing well the last few years actually. I used to have a Pixel. Apple's AI is show up late to the party, really late. They still don't have one. They're just copying, well, not copying, they're just literally getting it from Google. Their Vision Pro sales below expectations. They are not yet revenue driver and is a very long duration bet. Services antitrust. So, like I said before, the App Store takes about 30% cut uh, as of right now. Could fall over to 15 and 20% over 2 to 4 years. It is a good, it is good for developers, but it's pretty bad for Apple. Again, their profit margin as of right now is like 75%, you know, with their SaaS revenue. And AI monetization gap, even with the series going to be revealed, there's still no paid AI feature yet. And willingness to pay actually fell 11% compared to $8 per month average. It is a cool feature, but no clear revenue yet. China market share loss. So Huawei's Mate 60 Pro returned 8% China premium phone shares from Apple. Tariff risk, mostly last year, compounded structural share loss in 70% of the total revenue. And these are the red flags that it was clearly mentioned before, but this is just a better visualization. So what could the stock really do? The bull case is $350. The Siri actually drives an iPhone 7 upgrade wave. Services gonna hit 180 billion, 130 billion, next year. India's supply chain fully absorbed U.S. bound iPhone manufacturing, and tariffs impacts kind of neutralized. The App Store, and antitrust settled favorably. Google deal restructured but maintained at 12 billion. The PE ratio re-rates 40 to 42x. On visible services growth, the we bullish about 400 target in sight. And the base case, neutral, $304. Revenue grows about 3 to 5%, quite moderately. AI-driven upgrade cycle service at 11% compared to last year. Tariffs kind of partially absorbed. India manufacturing covers 20% of the U.S. iPhones. P ratio slightly grew, also driven by buybacks. In the bear case, China's tariffs escalation forces iPhone price hikes. China units falls by 20%. The DOJ App Store remedy plus the EU joint compressed service margin by 8 to 12%. The new Siri flops as an upgrade driver, and next year revenue stay flat at 416 billion. And the price to revenue ratio actually fall, so variation drop on slowing service narratively. I really believe the last one, personally, for the App Store, because 30% is a huge cut for developers. I do believe the bear case. These are the stuff that just gonna mention the bull and the bear, the bull, base, and bear. But again, some I agree, some of them I don't agree, and some of them are just kind of delusional. But those are just my own opinion. I don't think the Siri will flop because it's gonna be powered by Gemini, and a lot of Apple users are not really, up to date in a way. So they're gonna start using Gemini and say, "Oh wow, that's great." Even though no, I mean they're using Siri, but it's pretty much Gemini. So it's gonna be a huge shocker for them. It's actually good for quote unquote Apple. And the tariffs, I'm not concerned at all. Again, that's just a fluke. It's not gonna happen unless geopolitics change overnight of like Taiwan and stuff. So again, highly doubt it. So in the final verdict, I give it a 6 out of 10. So it's a hold for me. Again, I do hold Apple. Again, not much at all. Not even one share. As I said before in my previous videos, I just got it in my Robinhood account just for fun. Uh, when I try to copy Nancy Pelosi's portfolio, so it's really not much at all. So that's the opinion that I can have. I do hold something, but again, not not even much, not even one share, so really nothing. So again, it is a quality company. It's a cash growing company as well, and it's also a defensive machine with their SaaS. But it is a record high. It's paying a multiple for not too much growth. The price to earning ratio, you're not really getting a good deal as of right now, in my opinion, compared to other stocks. The Wall Street, their average target is about $304. So basically, where we're currently trading at as of right now. That really tells you that it is fairly priced as of right now. I don't want the tariff scare or dip towards $245 before backing up the truck. So I'm kind of interested to see the Siri demonstration tomorrow and kind of the community feedback like on Reddit or any other YouTuber or something. Just kind of want to see what people think about it. But yeah, that's really my opinion about Apple. Right, thanks. Bye.